Okay, I'll start the webinar. Thanks for prompting, Adinda. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'm going to present the Asian Session Live Market Analysis explaining the expected market moves for this particular week, 28th April to 2nd of May. So during which you come across the month of April gets over and the new month starts. So whenever you come across a week of that nature, we normally see enormous volatility in the market. So today we are on 28th, so we'll try to find out what sort of moves we could see during this particular week. Last week, you know that the market was making the higher level consolidations, and a lot of people have given the comments in various websites, etc., that the spread between the high and the low in predominant of the currencies like Euro and GBP were about 70 to 80 pips, and they have been holding and making range-bound moves for a prolonged period. And so people are waiting for the breakout. So people are not aware or they are not able to envisage whether it could be an upward breakout or a downward breakout. So that is how the interpretations you come across with regard to the higher level consolidations. So after doing the higher level consolidations, what the players intend to do. So when they hold it for a prolonged period at the higher levels, in the case of Euro 1.38 and the case of GBP 1.68, and either they should be the buyers or the sellers. So if they are buyers, then they wanted to rise further upward and wanted to book profit on the higher level. If they are sellers, then they will try to drop and try to book profit against their short selling. So these are all the only two possibilities. So in that, we need to find out whom they are preventing the profit booking opportunity. Because when there are two people involved in a particular deal, we have to find out who is going to be the winner. And if the winner is a very dominant character, then we need to find out what are the strategies he used in order to defeat the other person. So here the strategy they have to use in order to earn from that other small trader is avoid giving profit. Avoid the long holders to book profit. So automatically the long holders will come for long liquidation. And if the traders turn out to be short sellers, then they can simply firm up or make an upward stoppant. And once they stop doing the upward stoppant, we understand that predominant of the short sellers have covered their shorts and turned long, expecting a breakout, but they don't do the breakout and make a slide. So that's what last week, whole of last week, they have been doing it. And mainly, people were not very clear whether the market is going to really go up or come down. So let us find out what is going to happen in this market now. How's I am audible, I suppose, because nobody else made the comment. So probably you just exit and re-enter into that other room, you might be able to get it. Now the expected market moves for this particular week. Now this is 28th April to 2nd of May. So 28th, 29th and 30th, 3 days of April and 1st and 2nd of May. And first, in many places, it is a holiday because of Labor Day, especially in Europe and also in some of the other So in this market, you could come across some subdued moves, but there are some events which are going to happen. On 30th, FOMC meeting is expected to happen. They are expected to make the statements around 18 GMT on 30th of April. And 1st of May, around 12:30 GMT, the Fed chairman is expected to speak. And on second, 12:30 GMT, we come across non-farm payroll release. So 30th, 1st and 2nd, you come across the market is going to expect for some of the prime data or the speech, etc. And 28th and 29th, probably the market could continue making the sideways moves or a consolidation for this week for the traders to commit positions. So let us see individually on these days what could happen based on the algorithm. The algorithm gives the expected market moves for each of the sessions of the day. And in fact, it can give every 30 minutes, but I'm just presenting it free of cost here, the session-wise moves. So this session-wise moves, during that of the Japanese session today, 0030 to 7 GMT, it is expected to make the swing and slide move. So already you come across the Euro is showing about 10 pips negative net change, and GBP is showing about 11 pips negative net change. They're expected to come down a little more. Then during that of the European session, they are expected to make the lower level swing and form up again, and then make the swing and slide moves during that of the US session. So it will be more of a consolidation here with about 45 to 55 pips spread between the high and the low. And tomorrow, they're expected to make the swing and form up move during the Japanese session and quickly make a drop during the European session start time and then quickly rise and then make swing and slide moves during the US session. Then afterwards, 30th, you know that FOMC statement is expected around 18 GMT. So they are expected to make the swing and slide moves during the Europeans Japanese session and then make a drop again during that of the European session. So people might think that for FOMC, the market is expected to make a downward move, but they are expected to make a firm move for FOMC. Then afterwards on first, they are expected to make the swing and drop, discounting FOMC. And they could say that the Fed chairman could give certain clues or give the signals for how exactly the tightening and QE are going to be handled. So for that, the market is expected to make the swing and then firm up again. So once it firms up, then people might think that swing and firm up might continue further. And during the European session, US session also, they are expected to make the swing and firm up move on first. And on 2nd of May, they are expected to make a drop again during the start of the Japanese session and then swing at the lower level and a small firm up and then slide, small firm up and then slide for non-farm payroll. So they are expected to make an upward as well as the downward move. And as I explained in the beginning, that they have to trap somebody, either the long holders or the short sellers. And you know that after a prolonged consolidation, people found that there is no point in just going sell, taking sell position, aiming for about 10 to 15 pips, because the breakout is going to be upward. So during small drop, why not we take a buy? That is what people are trying to now view the market. And the players, you know that they always test the patience of the traders and then try to trap them. So here you find that there is no point in doing sell and buy trade when the traders decide and try to do the buy and sell trade. Either they go for the buy near that of the low when the low is not been breached, or if it is near that of the support, or if it makes a breakout above that of the high, then they will go in for a breakout buy. So once they take the buy positions, and if the players are not giving profit booking opportunity for them, understand that the players have got a different game plan. So try to watch on a daily basis whom they are trying to trap. And as far as my observation is concerned, whole of last week, and they have been giving the short sellers that those who sell after the rise are given the profit, but those who buy after the rise are not given the profit by making for the rise. So the players are trying to induce the traders to turn long in the market. At the same time, they are not giving adequate profit booking opportunities for them. So the players are building sell positions. Once the players build sell position, they will try to go in for a breakout on the downside. So the algorithm expects a downside breakout in this market. So let us calmly, objectively watch. So the forecast is given. Then subsequently, we'll use the market reading technique and try to find out how exactly the market is expected to make the moves in this particular week. As far as the levels in this week, the market is expected to make the moves, you find it is the same, the consolidation level, the range in which they have been expected to make the moves. And here you come across that euro again is expected to make a range bound swings near that of the 1.38 and then try to make a breakout below that. And GBP, it is slightly lower below that of 1.68 and then slowly they are expected to come down. They may make sporadically upward stop. And in the case of USDN, they have been doing a downward stop yesterday and on Friday below that of 102 and they are holding 102 now. Slowly they will accumulate and try to gain the levels in the case of USDN. All along you would notice that USDN was also showing negative net change along with that of Euro and GBP in order to make a downward move in the case of N process. Now USDN started gaining the levels. If it sustains in positive net change, then slowly it will make a break of the high and start going above. Then in the case of CHF, it is expected to make an upward move. Now it is showing 5 pips positive net change, but it is expected to make a further gaining moves. And you find that they are doing a consolidation now in the case of USD CHF. Subsequently, they are expected to gain the levels. And in the case of Canadian dollar is making the consolidation here and they are expected to make a downward breakout. And you could see soon the downward breakup in the case of USD CAD, and it could come down below that of 1.10 level soon this particular week, which will be a contrarian move as far as USDN is concerned. Then Australian dollar, and it is been doing the consolidation around 0.93, and slowly it is expected to make a downward move again. And already from 94, it has dropped to 93, and they are expected to make further drop in the case of Australian dollar slowly. So keep in mind that the commodity pairs are expected to make the contrarian move on the downside, and the majors are expected to make the USD gaining move. And so don't think that I am something bullish with regard to US dollar, and that is why I'm expecting Euro and GBP to fall and things like that. You know that earlier when I was telling that when Euro and GBP was trading around 1.32 and 1.5859 level, I was telling that they were expected to go up. And when I was telling that it will go to 1.3538 level, people are really telling that you are imagining, but subsequently we have seen such levels. Similarly, in the case of USD CAD, when it has gone to 1.12, coming back to that of 1.08 might be imagination, but nobody was expecting technically that it will come down, but they dropped it. So ultimately, we have to find out the conventional method may not give the right picture of the hidden agenda of the players. So we need to find an alternative method by which the hidden agenda of the players have to be read. And then we will be able to really capitalize the market. So here in the case of Euro and GBP, they are expected to make that downward move. And this particular downward move could continue during the month of May as well as June. So we have to calmly wait and see how exactly they are expected to make it. Now, with regard to the market reading technique, so we note down the initial lows and the highs in the case of 4 majors and 2 commodity pairs around 3:30 GMT. And so here you come across 1.3792 is from the live market code page, but actually in the platforms you come across 1.3816 is the low, and 1.3845 is the high in the platform, but here it shows 1.3848. Slight variation is there in the code page, but the platform and noted down because nowadays this code page is not altering the highs and the lows properly from which whatever is coming from the interbank treasury. So anyhow, we just make use of both the platform as well as the live market code page and try to find out how exactly they are setting the initial lows and the highs around 3:30 GMT, and try to track the market from there, what sort of moves they are doing it from time to time. So they are not breached the low or the high in the case of Euro, and they are not breached the low or the high in the case of GBP. In the case of USDN also, they are not breached. They are not breached the low, but they breached the high by 2 pips. 102.22 has become the new high. So they are expected to gain the levels, as I was telling you, that they are taken into the positive net change, when there are the negative net change after handling the uncrosses. Now they are expected to gain the levels in the case of USDN and USDCHF. 8806 is the low, 8827 is the high. So it is making the move within the highs and the lows set around 330. They are not breached it. And in the case of Canadian dollar, 1.1032, 1.1041 are the lows and the highs. They are not breached it. And in the case of Australian dollar, 92.69, 92.93, they are not breached. So only currency wherein they have breached the high is USD-yen. So they could make more visible moves in the case of USD-yen because there are a lot of data to be released. And we need to find out how exactly the market is, USDN is going to react for that of the data which are going to be released. And coming to that of the market reading and the trading. So our strategy is we try to take a sell position near that of the high when the high has not been breached from the start of the session for more than 30 minutes. Or we try to take a buy when the market has not reached the low and it is closer to low for 30 minutes from the start of the session. We try to take a buy and keep 30 pips hedge order to limit the risk. And once the position makes about 25 pips profit, we try to keep stop at entry and remove the hedge order. So there we use the hedging instead of stop. Then subsequently we trail the stop and also keep a take profit level of 45 pips to 75 pips, depending upon the momentum you come across in the market, and try to close the position either with a trailing stop or with that of the limit order. So what is to be done or given importance is the trading strategy. Whatever be the type of method we use in order to fine-tune our entry and the exit, still we should not take a chance between the cup and the lip in trading, especially. That is why I emphasize on that of the trading strategy. So what is the trading strategy? Here we use the hedging instead of stop. A simple trading strategy, we use the hedging instead of stop. And also, once the position makes profit, we try to keep stop at entry and remove the hedging order so that we don't incur any loss. So that is the second one. Then the third one is we trail the stop in a profit-making position and keep also the hedging order, keep also the limit order so that the market can either hit on the upper side, the limit, or on the lower side, the trailing stop, so that we are able to get the minimal profit or maximize the profit by increasing the trailing stop when the market is moving in our favor, and also increasing the limit order. So we have to use it because the market moves are so quick, we will not be able to think so fast. So the best thing is use such strategies or the trading strategies so that our profit is protected in the market. Then, in order to understand the type of moves they are making in the market, the most important thing is the identification of the sessions. So Japanese, European, and US sessions are the three sessions the player follow, and we need to understand how exactly they are handling the majors during the early and the late sessions, and the mid sessions they handle the crosses. And so when they are handling the majors, that is why I say that when from the start of the session, wait for 30 minutes. When they are closer to high, if we take a sell, we'll be able to get a definite profit. If they are closer to low and not breach the low during the early session, then definitely during the late session, they will rise. We'll be able to book profit. In this session's wise trade or within the session trade, we can see the definite moves happening in the market. Either if they start high, they will come to low. If they start low, they will go to high. This, you can see it in each of the sections. So follow the timings and also use the live market put page and read the market in GMT time. And also find that you enter into a currency wherein the spread between the high and the low is more than 40 pips. If the spread is less, don't enter into that particular currency because the holding time in that currency might be more and it may test your patience. You may lose your patience by holding the currency for a prolonged period. So the best thing is when the market is consolidating, the best thing is during the session start time, especially the European session. Watch, they will try to make a quick move on the upside in the case of euro. And once they stop cutting the new high for 10 minutes, you can take a sell. And afterwards, after forming the high, they don't breach that high for 30 minutes and then start making the slide. On a daily basis, I've been observing it and telling to the people who are contacting me through chat and also asking me, and how they make our trading so simple. And we will be able to sell once they form the high in first 10-15 minutes and keep the hedge order and afterwards keep stop at entry. And once they start making the slide, let it be 15 pips or 25 pips or 30 pips. Once the session gets over, you just close the position and look into the market afresh for the next session. So that way, if we try to trade, then you'll find that really we'll be able to make good swing trades irrespective of the market conditions. So I'll come back on 1st of May and try to review the forecast, what I had given it in this particular week. So this is the forecast sheet. I'll display it. In the meanwhile, I'll try to answer the questions which are asked here. See, any email Rakesh sent to me, definitely I will reply to you. You will also get the reply. And George, why GBP is not dropping? See, that is what they are testing the patience. As I told you, they are testing the patience of the traders. So definitely they will hold. Then the traders who have gone short will try to cover it with nominal profit or a nominal loss. And later on, what the impression what they will get is it is better to go long in the market rather than do sell and buy trade. So in order to change the mindset and the market perception of the traders, they need to do this. So every move has got a purpose behind it. So they are not simply making the moves in the market in order to float it. They are making the moves in the market in order to, with a definite purpose of making money. So in what way they can make money? They cannot continuously make money from that other short sellers all the time. Then what will happen? If they continue to make profit from that other short sellers, nobody will go short. Then they cannot make further money. So alternatively, they have to trap the long holders. And only then those who have changed their mindset to turn long in the market will lose the money to the other players. That is why you find that volatility is the order of the day, so that those who have gone short or those who have gone long, if they are not perceived the market correctly, they will incur loss in the market. By chance, they may book profit one or two times. And that is the way the market attracts the traders. And later on, when the traders are influenced with the greed and the panic conditions, they are expected to lose money. That is why you find everywhere you come across the statements, 95% of the traders are losing money in the market. How? Because the traders, the players know very well the traders' shortcomings and the psychology. One of the things is testing the patience. That is what they are doing it now. Then, could this be the end of the inefficient moves? So this is another expression for that of the consolidation, or it shows very clearly that Will has lost his patience. So inefficient move on the majors we have been monitoring for this month. So as I explained that they just make the traders frustrated. So how effective they are doing it, you have to appreciate them. That is why I always say that whenever they make a quick move on the upside, take a sell, quick move on the downside, take a buy during start of the session, you'll be able to quickly book profit and later on laugh at them. You cannot test my patience. So I know how smartly I can earn money from the market. So I will not simply take as soon as I open the platform and take a position following some technique, and later on wait and ask so many people what is going to happen in the market. Instead, I know that whenever the quick moves happen, they are all false moves. So such quick moves, when they drop, I'll take a buy and quickly book 30-40 pips profit, irrespective of the market condition. So if you fine-tune your trading strategy, or you try to become over smart than that of the players, then you will not ask such questions, or you will not lose your patience. So, well, definitely you'll come across the last week, they are bound to make the volatile moves because they also have the additional responsibility of handling the options in the futures. For that, they have to forcibly make big moves in the market. So this week, we should come across. Then Tepu, is stock market behave like FX market? No, stock market has got a different scenario because you know that in the stock market, you come across various products or the instruments, mainly the index, because many of the traders take the index like S&P 500 and things like that, and also in that futures and the options. Besides, you come across the stocks, the index stocks, that is the stocks which constitute to form the index, and the other stocks are there. And in the stock market, all the stocks cannot be handled by that of the single player. So the set of players, the set of people joined to act as the riggers in the market or the operators in the market. What they do is they consistently buy and continue to rise certain stocks. So once the sentiment is created, then other smaller operators also try to rise their own stocks, because there you come across the promoters' interest and also the brokers showing the interest. By that they accumulate the positions and gain the levels. Why? In order to distribute the stocks. So after gaining the levels, they simply distribute everything and let loose the market. Whenever you find the prime players let loose the market, and after selling everything, they withdraw the support from the stock market, go to some other market. The stock market is not in a position to rise even 1 point, 5 points. So it will hold. Then once the buying is over, there is no more buyer, then it will drop to the next level. It will drop to the next level. That is how the type of moves you'll come across in stock market. Then once they continue to drop, then after the final drop in which we'll find that there won't be any buyer and only seller, net sellers will be seen. Then you'll find like a free fall, the stocks will fall, but the players will try to buy at that time. So when everybody thinks that the stock market is going to collapse and no more stock market here afterwards, and that sort of feel when the traders get, and when they see that nearly about 30 to 40% of their stock value is eroded, they wanted to preserve at least 50% of the value and try to exit out of such stocks. And at the cheapest level, the players buy all such stocks. And afterwards, they try to consolidate the market and start gaining it using some other different news. They will simply say that stock market is now following forex market, or it is following some other market, or it is following based on the economic fundamentals. So they can give different occasions, different stories, and they can rig the market. So ultimately, the money flow from one market to another market, and we need to find out how exactly they are doing it. There comes our skill set. In Aditya, if the cross is in the middle of the range, high, low, in the mid sessions, do you take positions? No, not at all. When it is closer to high or closer to low, if we take position, we'll be able to see definite profit. If they are in the middle level, then wait for a quick move. A false move they will make. They will make a false move, appearing as if they are going to breach the low, but they don't breach the low and start rising it. So when such quick moves happen, try to take a buy when they don't breach the low. After going closer to low in 30 minutes, if they don't breach the low, take a buy. That is a false move before the intentional move on the upside. So when they are holding in the middle level, that means they are resting. They want the traders to commit either side, either the buy as well as the sell. And they only make a small swing of 1 or 2 pips in the market. So these things are mainly to give that impression that the market is alive, it is making the floating, but no trading opportunity. In such a situation, see, ultimately in the trading, volatility is very important for us. No, after we buy, the market should go at least about 20, 30 pips rise. It should show. Only then we will be able to book profit. If it holds at the same level, what is the use? So we need to understand when they are holding it in the middle level, it's better to wait without a position rather than commit a positions and wait impatiently. If the majors in near the high or low in the middle sessions, do I take a position? Yes, near the high when they have not breached the high for more than 30 minutes during the mid session. From the start of the mid session, the session timings I have given it. So note down the timings. So mid session here from 2 GMT, mid session here from 9 GMT, mid session here from 15 GMT. And 15 to 15:30 GMT, they're closer to high, but not breach the high, take a sell. Definitely you'll see the profit in the terms. So no more questions. So ultimately, imagine that it is a tug of war. So we have to find the strength and the weakness of the opponent. Our opponents are namely the players. As long as they are human, they will be having some setbacks. If they are gods, then probably they don't have any constraints in operating the market. As long as they are human, they will have the constraints because they have a certain set of rules given to the banks. They have to follow that. And they cannot be simply short sellers. They have to accumulate positions, and that can be used for booking profit. And, there are various other restrictions for them. They cannot continuously rise or drop a currency pair for more than 150 pips. So understand such limitations that I elaborately explained it during my trading system webinars, and find out how they are trying to trap the traders. When they are doing a consolidation, you calmly wait without trading. And don't think that you have missed their opportunity, because market continues to give the trading opportunity. When it is not giving a sizable profit booking trading opportunity, it is better to watch the market. Let it get the momentum. Then later on, you can enter into the market. And especially wait till the prime data release, because predominant of the traders are nowadays waiting till the data release, like non-farm payroll, etc. And only then they are committing position. And that is the main reason that the market is making such a low profile consolidation? Okay. I take this opportunity to thank FX Trade for the facilities provided to present the webinar. And thank you all for your presence here and trying to understand the market along with me. And hope you find my information is really helpful. And you also try to assess based on your own skill set so that you will be able to get convinced and later on commit positions. So if you develop a good understanding of the market, then the market will never give a surprise for you. As long as you fail to understand the market and you read the market indirectly using various other technical analysis or fundamental analysis, then you find the market gives surprise. But the reality, you try to understand and read the market accordingly, you will never get surprise. So wish you all very happy trading. I'll come back on 1st of May and try to take the second part of the Asian session live market analysis this week and try to review the forecast as well as how exactly the market has moved, either in tandem with the forecast or against. We'll review and try to fine tune the forecast from time to time. Thank you one and all for your participation. See you. Wish you all happy trading.